Hi there traders, this is Steve Miley, the market chartist for FX Explained, and our regular weekly macro watch update for the week commencing 12th of April 2021. Stock average surged to all-time highs, growth stocks re-energizing. So let's first of all take a look at the macroeconomic and geopolitical developments over the past week. Well, the FOMC met last week, and also we had a speech from Jerome Powell, and they simply reiterated their ongoing very dovish stance. And this did have an impact on markets, and we'll take a look again shortly, but US yields retreating from multi-year yield highs seen in very early April. And so equity indices reacted very positively to the US employment report that came from Good Friday, 2 Fridays ago, at the very start of April, that saw the non-farm payroll data far exceed the anticipated 675,000 number that was expected by economists, posting in at 916,000. Remember, on Good Friday, the US and global equity markets were closed, and then the US and Europe coming back on Monday and Tuesday respectively, playing catch up with that data and surging with equity indices surging to new highs. COVID-19 cases do, however, continue to rise in Europe, which is a concern. However, some European nations are starting to lift lockdown measures imposed over Easter, notably in Italy. So let's take a look at the global financial market developments for the past week, ending 9th of April. Well, as we said there, record highs for the US equity indices, here highlighted by the S&P 500, surging through the 4,000 level and now even above 4,100. And the Nasdaq in here. Now we've seen this rotation back towards some growth stocks. Growth stocks starting to perform now. Since they've had this underperformance really from late February through early March, very much sideways here for the Nasdaq in here throughout March, in a consolidation phase with other global equity indices and US averages, the S&P 500 and the Dow pushing to new highs. Now we've seen that rotation previously during that phase out of growth stocks into value stocks, but we're now starting to see growth stocks starting to outperform in here as we've gone into early April. Maybe a rotation back into those growth stocks starting to push markets higher in here, and that's been assisted by that slight dip that we looked at and we're going to look at again shortly from the lower yields in the US. Obviously the growth stocks in here not liking so much the higher yield moves that we've seen in here throughout this year. And the Ftse 100 also breaking to the upside in here, taking out the peak posted early this year, managing to make a new high for the year, a new recovery high, having been meaning more of a consolidation phase for much of this year. So there's that US, so with the US yield move. So we've had this surge to higher yields in here, prodding to higher yields right at the very early part of late March going into early April, but then a lower yield correction in here over the past week, and that's certainly seen an easing of pressures on those growth stocks and allowing those growth stocks to reaccelerate to the upside. But it's also seen that those lower yield tendencies have seen the US dollar weaken. So we've seen the US dollar index correct lower. Now remember, the US dollar index very much a reflection of the euro, but the US dollar also lower more recently against the yen. So dollar yen pushing lower, and the dollar index going lower in here, and being driven mostly though in here by the strength in the euro. The euro rebounding against the dollar, and part of that is now as the eurozone is starting to get its vaccination program back on track in here. Some hope of easing of lockdowns in here, maybe the third wave that we're seeing in Europe of COVID-19 coming towards an end, and maybe seeing starting to hopefully see a lowering numbers and coming out of the current lockdowns in Europe. So you've seen European indices benefit from that, and we've also seen the euro starting to benefit from that, and translating into US dollar weakness. However, the pound continues to be slightly weakening. We did get a rebound on the pound, but the pound weakening again through the second half of last week, and that partly to do with the fact that there's an anticipation now that all of the positivity that we saw from the very efficient and the positive vaccine program rollout that we've seen in the UK, all of the bullishness maybe from that has already been built into the market, and so now we're seeing that the positivity that the pound was seeing, the benefits the pound saw from that vaccine rollout diminish, and so we've seen the pound in here rolling back low against the dollar, and significantly against the euro in here, so a notable setback in pound dollar cable. And the New Zealand dollar in here, representing the risk currencies, Aussie, Kiwi, CAD in here, did see a slight bounce last week, but does remain vulnerable. So those risk currencies continue to remain vulnerable in here, with yield differential in here really the main aspect in here, driving the Aussie, Kiwi and Canadian dollars still remaining vulnerable, still looking to push potentially lower versus the US dollar. Oil market has been very sideways in here over the past week, and really since the middle part of March, having had that correction through mid-March in here to the downside, a very sideways neutral tone in here for the oil price. And similar for copper in here. The copper price in here, neutral in here since the late February, early March correction lower. Underlying still very much a bull trend, but in the short term in here, short to intermediate term, more of a sideways theme. But we have seen gold create a base. So gold in late March went down and tested that early March low and rebounded from it. And then last week progressed to push up above the March high. Now that creates a double bottom pattern. That's a technical analysis pattern, a double bottom, creating a base for the gold price. And there's real risk in here for gold to push higher, particularly if we continue to see US dollar weakness. Remember, the US dollar and the gold price often an inversely correlated, a negative correlation. So the weakness we've seen in the dollar, in the US dollar in here more recently, particularly against the euro and the yen, is helping the gold price higher. And technically we had that double bottom pattern creating a base for the gold price. Let's move on now and take a look at the week ahead, the week commencing the 12th of April 2021. Well, as ever, we continue to monitor those COVID cases, hospitalizations and deaths, particularly in Europe. We're also going to watch for lockdown measures, potentially new lockdown measures in Europe, but also looking now for maybe those easing of lockdown measures, taking off the lockdown measures as we've started to see potentially in Italy to progress throughout Europe. On the central bank side, it's a fairly light week. On the central bank side, we have the Reserve Bank of New Zealand interest rate decision and statement comes on Wednesday. But we do get US earnings season kicking off really in earnest from this week. Starting off with the banks and financials. So we get JP Morgan, Wells Fargo, Goldman Sachs. And then we also get United Healthcare this week, along with Bank of America, at Citibank and Morgan Stanley, all reporting this week. Earnings season coming back into play as of this week for the next 2 to 3 weeks. On the macroeconomic data side, we get EU retail sales out on Monday, Chinese trade data alongside UK GDP, manufacturing industrial production data comes through on Tuesday, along with German ZEW survey and US consumer price index, the US inflation data. Now, inflation is going to be important to monitor as we go through forward in here, given the moves in global yields, particularly US yields. So that's going to be an important piece of data to watch. We had the RBNZ interest rate decision and statement, as we've already mentioned there, on Wednesday. The Australian employment report, and again another CPI inflation data from Germany on Thursday, alongside the often much watched US retail sales data coming through on Thursday. And then we finish off the week with the Chinese GDP, retail sales and industrial production, and then the Eurozone CPI inflation data. Everyone, I'm going to wish you all a great trading week. Please do stay safe out there. Now, don't forget to hit that like button on our YouTube channel and follow us if you're not already following us. Subscribe to our YouTube channel, and I'll be back with you with another Macro Watch next week. Until then, take care and stay safe. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.